Mike Alfred. Mike, how are you this morning?
Great. How are you doing, Tim?
I'm doing well. There's a lot of stuff going on in the market. Sentiment has never been higher. What's your take? I mean, maybe even start with like the 4-year cycle. Is it less and less important? Was it never important? Like, why are people freaking out?
Look, I'm not freaking out, so I can't really fully speak for other people. I mean, a lot of people in this market are fairly immature as investors. I would say they're relatively unserious people, to use a phrase from Succession. So yeah, I don't spend a lot of time. I mean, I notice when people are acting overly emotional, but I don't spend too much time trying to analyze it or overthinking it. Like a lot of times it's just emotion. And then the moment that price action reverts to a more positive, constructive, path, then people all of a sudden are happy again. So I think, look, the short-term price action, I think it's saying that the Fed has been too restrictive. You see the unemployment
Bitcoin Treasury company is an idea that's all,
4.4% on unemployment. Hello, Michael Saylor.
I don't know why that happened. Sorry.
That's all good. Look,
technology is great when it works.
I think, yeah, exactly. I think that things are about to get older, and so I don't really worry too much about what's happening in the very short term. I think Bitcoin's just waiting for slightly better liquidity environment. Like if you think about crypto broadly, like over the last 4 years, like we've been in a bear market, right? So with the exception of Bitcoin, which has gone from 16 to 126 and currently sits just over 90, the exception of Bitcoin, it's basically been a bear market for 4 years since the Fed raised rates. And so anybody who thinks that like it's been a really loose environment, like that's not really entirely true. Like the assets that most require liquidity are saying that we haven't had it. So my gut says we're still early to mickle on terms of the liquidity cycle. And I think 2026 is actually going to be the year that people thought 2025 would be.
The first time I interviewed Matt Cole, and it's a theme that I've kind of latched on to. He kind of mentioned three things: AI, Bitcoin, and energy. I am kind of like purely ignorant to the mining space. I really haven't spent a lot of time on it. Can you walk us through like how you started paying attention to it and working in that, investing in that space, and if you think those are kind of the three things that are just we're going to be hitting on for the next couple of years and beyond?
Yeah, I think it's AI and Bitcoin, right? I think those are the most important technology megatrends. It turns out they both require substantial power in order to scale, right? So AI needs data centers, Bitcoin needs data centers. Anybody who doesn't understand that, like, has not finished their studying, right? And there are quite a few people like that, right? There are a lot of people like software investors who think that you can scale, a GPU, NeoCloud entirely without owning anything. And I'm just here to tell you that's absolutely untrue. And anyone who doesn't understand that Bitcoin is unique in the world of crypto because of the large scale power being sort of galvanized and directed network to protect it, like also doesn't understand. So I really think it's Bitcoin and AI with power at the base layer. And so when I'm underwriting these data center companies, like the most important thing to understand is like how good are they at taking power and turning it into compute. If you're using an ASIC, right, you're generating compute for Bitcoin. If you're using a GPU, you're generating compute for AI. And in order to be really profitable doing that, because it's a heavy duty physical business, like you have to be really good at physical stuff, right? So like this whole frictionless digital world that we all think we live in now, it's actually powered on the back end by a lot of duty physical infrastructure. And so my thesis 2-3 years ago, maybe a little further back, was that in order for these things to scale, we would need better and better and higher quality and bigger infrastructure. And I saw a lot of sort of pretender companies, primarily in the Bitcoin mining space, like had pivoted into Bitcoin mining, but were not expert at actually running infrastructure. And so I identified a handful of companies that were actually infrastructure experts, right? That knew how to build and develop and run large scale infrastructure. And the argument 3 years ago was, well, if they don't hold all their Bitcoin, then they're not going to be a good investment. And that's actually been exactly wrong. It turns out that the only way to win in physical infrastructure is to be good at physical infrastructure, right? So being bad at physical infrastructure and then holding Bitcoin doesn't absolve you of your sins. And so as much as I love Bitcoin, in certain categories, you actually need to be excellent at the business of doing that business. You can't just use Bitcoin to obfuscate the fact that you don't have a real business. And I think that's going to be an increasingly common theme. Like, you're going to have to ask yourself, like, what is the real business here? If your entire business is predicated on the price of a commodity going up, and that's your only advantage, right? Then like there's going to be long periods of time where it's not fun to be an equity shareholder in that entity. If your primary business is to be excellent in the real world at delivering physical infrastructure, well, then you can win even in environments where commodity prices are low, whatever your commodity is, in this case, compute. So look, I'm long-term bullish on all this stuff. But if you think about what's really worked in the recent past, it's to own the most scarce thing, which right now is power and infrastructure that can be levered for compute.
Is that a winner take most because you need to have that physical infrastructure and it's just, they're not making any more? I mean, it just takes a certain amount of lead time to actually make that stuff happen. And then also, is there like a solution to like the Amazon, the Cloudflare, where all this stuff goes down and it's just like, can you guys not have stuff go down? Or am I thinking about it too simplistically?
Yeah. So
in terms of not to go down, right?
Yeah. I mean, in terms of the fragmentation of the market, like, I don't think there's ever going to be like one or two big winners, because physical infrastructure it's really heavy CapEx. It's hard for one entity to control that much land and power. Like, the ownership is so fragmented. I think it'll continue to be that way. I think the best scale players, though, will sort of suck the oxygen out of the room, such that, like, if you are Microsoft's preferred, if you're Meta's preferred partner, and you demonstrate consistently over a period of years that you are just so much better than the alternatives they have, they'll increasingly pull their business from those other firms and give it to you. And so that will create larger and larger players if they can demonstrate that they can actually do this. And I think that's sort of what's playing out now. Like, there was a group of firms that people thought would be the winners 6 or 9 months ago. And a lot of those firms are not actually experts at infrastructure, and they're starting to have issues. You know, they're reporting on their earnings calls that they're having a delivery issue and they're having a delay. So they're going to have to read guidance. And there's going to be the next thing that'll be fun is when people actually believe that. Like, they believe that it's just a temporary issue that'll be resolved in the next quarter. No, these are systemic issues, right? If you're not actually really, really good at infrastructure, you'll always have issues. In terms of the downtime issue, like, look, the best infrastructure operators always create like redundancy in terms of power and in terms of connectivity and fiber, right? And so in some cases, iron 3 or 4 different ways to connect to the internet at a single site, right? Like, that creates a fail safe if your primary source of connectivity goes down. You know, but ultimately, again, like, some of these things are sort of outside of your control. Like, there'll be situations where, you know, like we saw with this week, where as good as these companies purportedly are, like, stuff goes down. I'm not sure that'll ever change. But one cool business model I saw, Tim, a couple of days ago, someone sent me an email. They're building nuclear submarine technology to run AI cloud, right? So, like, basically you'd have your compute in a nuclear submarine floating around in the ocean, right? And you'd have a bunch of them, such that even if there was an EMP that wiped out a lot of your terrestrial compute, you would actually have under the ocean in a sub, right? And like, kind of an interesting model, because, you know, as a sort of national security asset at some point, right? Like, you'd want to have multiple ways to maintain that connectivity. You can imagine, like, your drone defense, right? Your missile defense system is attacked, it goes down or whatever, and somebody's launching a massive drone swarm attack against you. Like, you'd want to be able to turn back on your AI enabled defenses using that kind of backup power and compute, right? If they're able to attack successfully your primary power source.
How important is it to, like, actually go meet some of these firms in person to actually really understand what you're thinking about investing in? Or is it like, no, we're in the digital age, I just DM people and jump on calls and it's all good?
I mean, look, I think you can learn a lot from being in front of the CEO, being in front of the boards, the teams. I think people have to, because sometimes people get too close, right? Where they like the people too much that they don't see the truth and the reality for what it is. And so I think it's a balance, right? Like if you're not getting any FaceTime with the companies you're investing in, you're probably not going to be able to assess fully all of the opportunities and risk factors. But also, if you're spending all your time with a company, like you're probably going to be deluded into thinking that company is perfect or better than it is, because of course we like everybody when we're with them more than when we're not. So I try to keep like a good balance there, where I will spend time with teams, but I'm also like naturally very skeptical, right? And I look for things that could go wrong, and I don't become overly loyal for no reason, right? Like I will, if I see something that I don't like, I'll just say it, right? And so some people don't like that. You get a reputation of being a bit more difficult, but candidly, I don't care, right? Like it's all about generating returns, and I care more about what my kids think about me than what some CEO of some company thinks, right? They execute well and deliver, then yeah, I'll applaud and we'll be friends and all that. But just because I like someone, if they consistently make poor decisions that destroy shareholder value, I will say something about it, right? And I think not all investors are like that. A lot of investors think they can do that, but then they spend too much time with the company, and then they start to like become a sycophant, right? And they start to just echo the company's statements, and they cease to sort of think and act independently. And I think that's, from an investor standpoint, it's quite risky. Now, not everybody is trying to be a world-class professional investor, and so maybe it doesn't matter. But if your primary occupation is to be a world-class investor, then you can't, you can't become like basically an employee of companies you're investing in.
Yeah. I know you touched on this probably a few times, but what's your etiquette on social media? Just like mute, block, move on, because like there's just so much noise. How do you navigate through that? And is there anything you've learned recently, or kind of like themes that you've seen where you're just like mute, block, okay, like move on, like trying to actually, because you only have so much energy and time every day.
Yeah, that's it. Like some people are like, oh, you're only doing these things because you want to get rid of your critics. It's like, I could care less if somebody disagrees with me. But if somebody shows up in the replies 17 times in a day with the same comment, like your first buy on the dip was too high, and it's like, okay, like I buy the whole way down and I buy the whole way back up again. Right. So thanks for like, by the second or third or fourth time, I'm like, got your message. Like, you're a chart squiggler, and you of course perfectly know every top and every bottom, but like you're wasting my time. Block. It's not that it doesn't bother me that they're criticizing my trading. That's not the issue. The issue is the time wasting, right? Like, you've made your point once, move on to something else so that I can read a reply from somebody who's actually sincerely trying to learn. I can barely filter through it with the amount of velocity I'm getting in terms of notification. If I allow those kind of time suck negative people, there are a bunch of people too who are not sincerely in good faith, like trying to get anything positive out of the interaction. They're literally just like lobbing bombs, thinking they're going to hurt me. But again, I get 1,000 nasty messages every day. I get 5,000 nice ones and 1,000 nasty ones. And so being the 981st person to say that I'm ugly or I have a big nose, or right, I'm a bad trader, or I lost people money in 1987 or whatever, right? Like it doesn't like do anything. I don't really feel anything. I just notice that that person clearly like is just angry and like is struggling to process their own emotions. And since I'm not a therapist or a psychologist or a counselor, right, I don't hold any adult person's hands when they cross the street. Like, I don't really have time for that. So once I determine that the person has no real interest in learning or like evolving or interacting in like a way that's beneficial, then I just remove them. And so I used to mute, but now I've just determined if somebody, if I want to mute somebody, it's because I should probably just block them, because then if I mute them, then they're just going to keep saying stuff that's obnoxious and I won't see it. So like the other day, my wife saw something that was super racist, right? That like was completely inconsistent with my values. And they kept saying stuff like that about a particular race. And so I had to, because I had muted them, I couldn't find their profile. Mm-hmm. So I had to go in and search for their name, like it was long, right? I had to put it in and find them and then block them. And so I just realized like if I have the need to meet somebody, I should just block them, right? Because I just don't have time to be like policing the amount of just obnoxious, hateful, racist type of stuff going on. And there's just, unfortunately, that social media, there's a lot of it.
Yeah. Any closing thoughts on this, November 20th? Any thoughts going into the holidays?
Well, the NVIDIA earnings were huge for just overall risk sentiment. It sort of diffused this whole AI bubble. I mean, I've been saying for a while, it's a complete joke, but NVIDIA's earnings like basically put that to bed. And so I think we have a couple week, 2 to 3 week period here where there's almost no negative catalyst and there are a bunch of potentially positive ones. So my bias is to think that like the next week should be pretty good for risk assets, right? And I think the next sort of potential negative catalyst is the Fed meeting. But given where unemployment came in today, I think the market's probably going to start pricing in higher odds of a cut. And again, whether they cut or not in December is short-termism in a sense. Like we know 6 or 9 months from now, rates are going to be coming down 100, 150, 200 bips. And the environment for risk assets, especially in a midterm year, right? Like it's going to be better before it's worse, right? So like there's going to be some period of time over the next 6 months that are quite good. I expect the treasury companies, many of them to bounce. I think the best ones like Strive will bounce and go higher, significantly higher than others. And the reason why I like Strive is because there's no exploding debt. There's no liquidation mechanism, right? Like the criticisms around that, they may not always be true, but you can't even make that criticism of Strive. And so I really like that. You got a sophisticated team. You've got a strategy that I think can work to accumulate Bitcoin. And I think once this sort of risk off Bitcoin period is over, like a lot of stuff's going to go higher. So I'm quite bullish on the next, call it 3, 6, 9 months. And I think this bull market, when it gets going, could run into 2027 or 28. So whether there's a 4-year cycle or not is sort of irrelevant. Like we've clearly gone past when we typically would have seen a top, and there were 0 cycle top heuristics firing over the last 2 months. Other than price going from 126 to 88 or 89, like there's no signs that you would typically tie to a top that you could identify looking backwards. So I think we're just waiting for clearer path on liquidity. And then I think Bitcoin goes back to all-time highs.
Is sentiment more negative than usual? I mean, this is like a very normal 30% drawdown, but, and maybe my memory's just too short, but it seems like during other drawdowns, it was just, I don't know, is it bots or something else on social media that just like all of this craziness and hatefulness and yeah, it's just a little nuts compared to historically, I guess. I
mean, I think the crypto is much smaller. Like if you look back to 2017, there were way fewer eyeballs. There were way few people focused on it. You didn't have even crypto treasury companies, right? Other than MicroStrategy in 2021. So you just have a lot more normal people, right, who own the ETF. You've got a lot more people that are unsophisticated. You got a lot of people who piled into treasury companies at high prices over the last 12 months and are now down substantially. And so I think it's frustrating, when like Bitcoin's more or less flat for the year, and then you got people that are down 80%, right? And so like understandably, they're annoyed and frustrated, and they feel like they got duped or whatever. But like that's investing. Right. If you didn't understand that was possible, you shouldn't be here. And I basically tell people all the time, like, if you can't handle this type of drawdown, you should be buying index funds, hire an advisor, pay the 1%, save out of your paycheck in your 401k plan, buy a house, and hope to retire at 65. Like this may not be the right space for you, right? This space is for enterprising, skilled investors who know how to do their own independent analysis, who know how to keep their emotions in check, right? Who buy the dips, right? And who are very aware of the risk factors when they make investments, right? Like I am aware I could lose money, and I also understand that like mark to market on per losses don't necessarily have to be materialized unless you're in a bad position, right? So if you're not using margin, you're not using options, and you're just holding high quality companies and you buy them at reasonable prices, then you should be able to ride through stuff like this. And Bitcoin is probably the high quality large scale asset in the world. So if you're buying it at almost any price, in some period of time in the coming 12, 18, 24, 36 months, the price will be higher unless the government stop printing money. That's the only thing that could go wrong. If governments all of a sudden become like super they austere and focused on like running, fiscal, surpluses, right? Like if that were to happen, then yes, like Bitcoin could be under more sustained pressure. But in the absence of that, and I think most people would agree, there's just nothing in the fiat system globally that's telling you that that's what's going to happen. And in fact, it's quite the reverse. I think there's going to be an acceleration in loose money policy and money printing, right? And asset inflation, monetary debasement, et cetera. Like I think that it's going to accelerate. So if anything, we'll look back and say, wow, you remember that moment in Q4 of 25 where like the whole world was in a mass delusion that like something was wrong with Bitcoin. And then you wake up in Q2 of 26 and Bitcoin's 180,000 and everybody's like loves Bitcoin again, right? It's a story as old as time. I've been through these things enough to know that you don't need to know exactly why, and you don't need to know exactly when. You just need to be able to recognize the pattern and understand that anytime it feels like this, it's almost always a buy opportunity, right? So when it goes back to 126 is sort of anybody's guess. Will it go back to 126? Absolutely, right? As I said, unless the government stop printing money, it's eventually going to go to $1 million, $2 million, $3 million a coin. It's literally just math.
Yeah. What are your thoughts on Bitcoin when you zoom out, really kind of doing what gold did when it first had the ETF? It was just basically like a decade of a bull run with volatility, obviously, but it's like, you just have all of these institutional channels opening up, and, we all see the headlines as far as nation states and corporates and all of that. But yeah, it's like, and I guess just before I forget, is the whole preferred and digital credit, whatever narrative or words you want to use, does that have the potential as it scales to be just as important, if not more important than nation states? Or is that kind of like a step too far?
I think they're related.
Okay.
Yeah. I mean, I think if this is pristine collateral, if this is the best neutral reserve asset, right, that like eventually supersedes gold in some way, like it has the potential to be sort of, both things have the potential to be very big, right? So like governments will hold it, and almost all like global settlement could happen eventually on it, and you could have, of course, like the whole credit market sort of built on it. That seems far away now, but look, we could be going into, there's a plausible scenario where we don't have these like 20x, 30x moves up and then an 80% drawdown. Instead, maybe we just go up 100, 200,000 like every couple of years, and then a 50K or 75K drawdown, and then another 100 to 150K up. We've seen that with other assets, right? Like as you said, you alluded to the gold ETF, like that would be the way that we get to $1 million. That doesn't involve us like just shooting way up and then falling 85%. I think it's going to be hard to fall 85% because there's a structural bid now. It's not quite like the S&P 500 yet, but that's sort of the direction I think we're headed, where the S&P 500 gets all the dumb money in the world, right? Like basically all the naive, indexed, like people who are not thinking, they're not discerning investors, they're not enterprising investors, right? It gets those flows every day from just people's paychecks, right? And Bitcoin hasn't had that, but the more Bitcoin gets embedded into the system via the credit market, via nation state global reserves, via things like the ETF going into target date funds, so they show up in American retirement accounts. Like if those things happen, then you could see a scenario where Bitcoin just goes from here to $1 million without like even a 50% drawdown. That's plausible. Now, am I saying that's likely? Probably not today. Like it still feels like we could have a 60 or 80% drawdown at some point, but I also would not rule it out, right? That we could just sort of march higher over the next 7-8 years.
What's your take on the NVIDIA memes where it's like Atlas just holding up the whole world? Like the earnings call is everything. Is that just like kind of silly? And it's like, yeah, it matters for like 5 minutes to 5 hours or 5 days? Or is there a world in which like you just have a couple of companies' earnings where you're just like, I really hope this goes well?
I mean, it just goes to show you how much sentiment narratives are running the market in a vacuum where you don't have government data, right? The government's closed for 45 days and you're not getting the regular releases. You fill it with whatever you want to, right? So like the bears and the quants and these market makers that were out of position, they filled it with false narratives on CNBC, triggered off of Michael Burry and Jim Janos to like failed hedge fund managers, right, who are famous but unclear why, because they haven't made money in 18 to 5 years. But like they're out saying, you know, Bitcoin sucks and AI sucks and everything's overvalued and blah 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 blah. And so all it took was NVIDIA just to remind people that hey, this is the biggest company in the world and their demand is off the charts. Like it's literally not on the chart. And we are seeing that, right, at IRED. Like we are seeing that. I didn't need the NVIDIA earnings to know that because I can see it every day. And again, that's a nice source of edge for me because I don't get spooked by these information vacuums like we just had over the last, call it 2-3 weeks, where people were using whatever sort of bad narrative that they could come up with to try to trigger people to sell. And I think anybody who sold into that is going to regret it, right? It's going to be very obvious in a few months that was really dumb. But I get it. Like people get scared easily. There's a lot of emotions, and this is a social media driven, ADD, retail fueled market to some degree. So whenever there's a vacuum and it starts to be filled with bearish narratives, those things can take on a life of their own, especially with so many sort of inexperienced investors that are easily influenced. So look, the NVIDIA earnings are important. But again, if you've been following the market closely, you didn't really need the NVIDIA earnings to know that like AI is in the first inning, right? Like we see it every day. I don't need NVIDIA to tell me that, right? It's like, it's very obvious if you're in the business.
What's the dynamic for yourself and when people are actually in these meetings? I'm kind of alluding to like the Bitcoin world and the TradFi world kind of like colliding. And when some of these treasury companies are being offered $1, $2, $3, $4, $500 million, but, you know, it might be hot money or predatory, or you could at least characterize it as that, or you just have pipe unlocks and you just have to like turn over that shareholder base. Like, are there better, like obvious solutions, or is it just part of the process? Or I'm just trying to like wrap my head around that.
Well, it's kind of a new structure, right? It's kind of a new industry, and you know, capital availability and the cost of capital is just, it's going to be harder and higher early on than it will be later when the model is more proven, right? So people are just MacGyvering their way into the market, which is something I warned people about. I said, if you've got a bunch of people without a lot of capital markets experience, right, and you got a bunch of like event planners, right, and social media influencers, and someone just giving them hundreds of millions of dollars for a reverse merger or a SPAC or whatever, like you should expect some carnage out of that. I think that's a natural evolutionary process, and experienced investors have known that the whole time, right? Because I've been warning people for a year that like some of the stuff has gotten out of control. The issue though is some of that behavior will obfuscate like real innovation and real opportunity with teams that actually have experience in capital markets and can structure the right securities to actually deliver value in this context. So that's what I'm trying to do, like, is dig through. I wasn't as interested when people were really excited and sort of hyping it, but now that the sheen is sort of off the rose and people are bearish and the sentiment is negative, now I'm picking through the rubble and trying to find the stuff that's actually interesting. And so far for me, that's Strive. You know, I'd still own my MSTR, but of course my cost basis is so low there that it's in an IRA. Like it's just kind of sitting there. I'm not planning on trading that. I do think when Bitcoin recovers, it won't really matter. Like some of the companies that have the worst structured securities will still go up the equity values, because to some degree it's just a risk barometer and a liquidity barometer and a sentiment barometer, right? And when things are negative, even if your structure is good, right, like the stock will go down, and when things are good, even if your structure is bad, the stock could go up. And so I think people should look for the highest quality things, but also realize that there's a certain amount of beta here, right? And there's a certain amount of just like, it'll go up because Bitcoin's going up. It'll go up because people are bullish again and sentiment is positive. And that's just the way markets work. Like that's sort of the way markets work in a lot of contexts. But again, because we're in this social media, memified, gamified world, like it maybe is more exaggerated than it has been historically.
Makes sense. That's all I got for you. Really appreciate you joining us. And I'm glad that you, I guess, didn't have jury duty, right?
Yeah. I got they'll probably call me again in 18 months because I got a waiver this time. I just got an email saying you don't have to go. So it's great.
Yeah. Awesome. Well, thanks, Mike. And we'll look forward to following along and keeping up with you from time to time.
Sounds good. Thanks for having me, Tim. Bye-bye.
Thanks. When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control across 3 independent, regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure. No pooled or omnibus exposure. Just segregated, client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. It's the strength of many delivered through the simplicity of one. MIC is the foundation for everything OnRamp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now, OnRamp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible than ever. OnRamp. Strength in many, simplicity in one. Visit onrampbitcoin.com to learn more. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at the Win in Las Vegas, February 23rd through the 26th, 2026 for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin treasury phenomenon.